is finding or getting or generating, creating alpha more difficult? And I ask because, you know, when I take a look at spreads right now, credit spreads, I mean, there are no spreads. They've evaporated.
No, I completely agree. On a spread basis, it is less attractive, and that's sort of globally. But, you know, for us, because we can either move, I mean, we're quite opportunistic, we can move across the whole capital structure. And in investment grade, this is the reason why we are actually shifting away now from investment grade and more towards high yield. Last year, we actually had a fairly balanced portfolio with around half-half between high yield and investment grade. But, you know, as I said, keep in mind, you know, for us, it is about active management. I think this year, to your point, I think it's less of a year where you just leave your positions only for carry. I think you have to trade. And this is actually the year where you have to look for alpha because particularly for funds like ours that are more events and situational oriented, it is about picking those spots and having a view towards trigger events in corporates, which we still find and see. You know, overall, I think that between now and end of the year, if you were to just hold and buy and hold, I would bet that you do still end up on the year slightly positive. But I think to make real alpha, we are here, you know, to trade. And I think you will have some investment grade that are range bound, which every time there is a spike in volatility, you can go in and then trade in and out. On the high yield side, there are definitely still a lot of corporate events. And overall, what's interesting is that a lot of the high yield issuers had pre-funded and had refied earlier. So you do have some cushion there to look at relative value.
Marco, talk to us about your tilt towards high yield. I mean, for Asian high yield, EM high yield, there was a time not that long ago when what we actually meant was Chinese property developer offshore paper, right? Dollar bonds. Obviously, that's changed. The weightings have changed as well. But I know that you're looking again at China high yield bonds now today. Are these selected property developer bonds or something else?
Actually, we are still pretty cautious on China high yield, primarily because we haven't seen anything particularly reassuring coming out of the legal framework for protections, especially in distress on recovery. So that makes it still a black box and less analyzable. But, you know, I would point out that the markets have become open for the few left that are performing. And I think some select Chinese industrials have the sponsorship to be able to get cheaper refinancing onshore, which also helps the offshore bonds. We're actually still pretty cautious on China high yield, to be honest. But, you know, I think that the rest of the world, rest of Asia, emerging Asia as well, is interesting. And we have come away from any contagion impact of China high yield on the rest of Southeast Asia. So in Southeast Asia, we still like the names that are related to mining and metals, for example. And that includes, you know, we still like carry trade on Mongolia. We like Sri Lanka. So, you know, I think our spots in Southeast Asia is really where we're focusing. India, for example, you know, I think that investment grade is too tight. So we have shifted into high yield more in India.